All right, so looking at the numbers, things haven't changed very much, but things have actually intensified as far as I can tell you. So let's look at supply and demand on the freehold GTA properties, not including Halton. So when you look at the data points here, what you can see week over week, supply and demand has kind of followed in tandem. So if you look at the last several weeks here, you can see that number of listings as they went up, number of sales kind of went up and down at the same time. So when supply and demand go up and down together, you see a stabilization in prices. That's why the prices that we've been reporting haven't really changed or fluctuated too much. And in fact, even year over year, it's kind of been on point where we are, despite last January having an increase of living by about 11% between interest rates and inflation. So you look at it week over week, I suspect the 512 sales that we're seeing here, there's probably misreporting, meaning that there's a couple of agents that probably haven't reported their sales transactions yet that I expect to fill in the next couple of days. But this probably isn't down. It's probably up as well. So prices should stabilize based on supply and demand. Now, looking at that data point and analyzing what's happening from a different perspective, if you look at the average ask to sell ratio, you can see that we're over the 1 mark. So for those of you that are telling me that you're seeing, especially at certain price points, properties that are going multiple offers way over asking, the proof is here. We can see this. Anything over the 1 means that properties are selling over asking. So this is evidence of that. In terms of the number of days on market, you can see that we're back to where we were in November, almost 17, 18 days on market, which means things have improved quite considerably. Anybody that's new to the team, I want you to remember that the number of days on market is separate and apart from the type of market. When we talk about the type of market we're in, whether it's a buyer's market, balanced market, or seller's market, a seller's market is anywhere between 0 and 4 months of inventory. Meaning if no new properties were listed today, it would take between 0 and 4 months for all of the existing inventory to be sold. Based on my extrapolated data points that I'll show you here, looking at the weekly numbers here on the freehold side of things, you can see that we're sitting at around 1.99 months of inventory on the freehold side of things. So 1.99 months of inventory means that if no new properties were to hit the market, it would take about 2 months for everything that's currently listed to be sold on the market today. Now, contrasting that with the average days on market, this is how long a property is sitting on the market on average based on all the metrics. And despite that, we're seeing a sharp decline. So that Amazon effect that a lot of sellers are used to, where properties listed, multiple showings, followed by multiple offers and over asking, this is an indicator that this is in fact what we're starting to see a resurgence of. So it's happening. Anybody that's on the fence about getting in the market right now, this is probably it. You've got a couple of weeks, in my opinion, before things get really real. The inflation numbers came out for the last month. We're at 2.9% versus 3.4% in December. This is only going to further fuel consumer confidence. And with that, the trajectory of the Bank of Canada rate announcement is probably going to come sooner, and it's probably going to decline because things are looking like they're improving. Now, if you dissect the inflation numbers, a big part of what is bolstering the inflation at the point that it's at now 2.9% is the fact that interest on the mortgage has inflated the cost of living. Fuel prices have started surging downwards. So we're not exactly where the bank wants us. They want something around the 2% mark, but it is an improvement looking at it month over month. Travel is way down. It was negative in terms of travel impact. So all these things are really interesting. Now, looking at the freehold side in terms of average price, like I said, we shouldn't see a huge jump up or down because supply and demand are following one another. Whatever's being listed, it's not being acquired entirely, but overall, 2 months of inventory is a very strong seller's market. So we're seeing about the 1.3 average, and that's pretty standard right now. Now, condo market is very different. And I think the agents that I'm talking to on the condo side of things, they're a little bit concerned about what they're seeing. And there is a little bit of a concern that is merited. So when you look at number of listings versus number of sales on the condo side, you can see that it is up and down together, but the number of listings outweighs the number of sales. So it's quite disproportionate when you compare it to the freehold side of things. And extrapolating this data on the condo side of things, we're actually about 3.66 months of inventory. Now, a lot of people ask why. Simple answer. Look at how many pre-construction projects are now in interim occupancy or final closing. The amount of inventory that's hitting the market and flooding it right now is insane. And you have to keep in mind, anybody right now that is holding a condo in occupancy, they're paying an absurd amount for occupancy fees because the interest rates are still at an alarming rate. And they calculate those rates on the overnight Bank of Canada rate. And you're paying this monthly payment. It's not paying down any principal. It's of no benefit. And rents are far outpaced by the monthly costs. So a lot of people are pivoting to try to sell their unit or assign it. So we're seeing more of that. 3.66 months of inventory is still by definition a seller's market, but it's a very soft seller's market. It's going into balanced territory. And if we continue to see the number of units hit the market at the pace that we're seeing now, that could tip the condo site into a balanced market. But that wouldn't be news. This is kind of expected with all the occupancies that we're seeing right now. Now, taking this data and going to the average ask to sell ratio, you can see it is on an upwards trend. But I suspect this is because a lot of the listing agents that are listing properties on the condo site, they're being very smart. They're not looking to underprice and get multiple offers because it isn't working. And so the gap between the one mark is still narrowing in, because as more and more listing agents list the property for what it's worth, you see properties sell close to the list price invariably. And that's what's bolstering this data point, in my opinion. Looking at the average days on market, it's down, but not as stark as we see on the freehold side in the GTA. We're at about 32 days, months of inventory. So some of our agents are reporting that when they list a condo, for the first week, it's only 5 or 6 showings. There isn't much happening. It is going to be a longer burn from that perspective. In terms of average sale price, if you look at the average sale price, it's kind of hovering around the same. And again, this is because supply and demand are going up and down in the same direction, but we're starting to see more inventory relative to the number of sales. That's why it's kind of all over the map. But I think as time goes on, it's going to start filling in a meaningful way. Now, everybody that attended our session in person last weekend is well aware of the dialogue. If you look at any institution and take a cross section of the last 90 days and 300,000 mortgages, only 187 people are late on their payment. Consumer confidence in real estate has always been high in our country. And I think if you look at the optics, I've always said that when I went to the last Rotman Roundtable, they were saying for us to be the average of the G7, we would need to build 1.8 million properties 6 months ago for us to be considered the average of the G7. At the Outlook, mortgage architects Dustin Woodhouse said that by 2030, we're going to be 5.8 million homes short. So when we talk about a housing crisis, this is a real problem, because despite all of the land, all of the red tape, all of the taxes that people are complaining about being washed away, we don't have the drywallers, the plumbers, the electricians, and all the tradespeople that we need to be able to build more than 40 or 50,000 units a year. So anybody that's able to hold on to their real estate is probably encouraged to hold on to it. Anybody that's looking at the market to sell right now, if you're not selling to buy, your rental prospects aren't great, although there is more of an influx in terms of rental inventory. But I think in the next 6 months, the story is going to turn around quite significantly, and it's going to be back to what we were seeing beforehand. Does anybody have any questions or comments?
Ricky, in the data that you were showing, I think if I saw it correctly, the difference between the number of days in market between, let's say, summer, June, July last year, and now among the condo sector is larger compared to the freehold. So in freehold, the fluctuation is less between summer and now.
Yeah, so here's the freehold days on market.
Right.
And let's make this a little bit easier to understand. So let's look at the last year monthly. If we look at the last year monthly, we're still at an all-time high as of January, right? But if the weekly indicators are reassuring, it looks like we're going to be back to this very soon. I think in the next 15 days, sunset's going to be by like 7:20 in the evening. So as the days get longer, the temperatures are more manageable, you're probably going to see a very, very busy spring market. That's what I'm anticipating. I'm seeing it now, and it's not spring. So by the time spring hits, it's going to get alarming. I'll give you an example of a property that I listed. I wasn't expecting it to sell over asking. I wasn't even expecting multiple offers. Despite that, it sold over asking firm with 3 offers on the table. And this was a property in Stouffville that I was like, hey, we've kind of listed it for what's reasonable. But people are getting back on track with that. Now, if you look at the condo side at the same way, look at the monthlies, you can see it's 40 days on average as of January. But even, pre the winter months, you can see that the average was about 25, between 23 and 25 days. Okay. So the condo market's a bit tough to crack right now. There's no denying that. And I can tell you at my law office, every day we have a couple of interim occupancies or final closings that are happening. And these are all projects scattered around the GTA. The average, I can't tell you what the exact average is, but think about it. If you've got a condo project by one of the big builders, we're looking at between 400 and 600 units dropping on the market in any given month.
Mm-hmm.
I saw that with K Square. We had so many listings at K Square in the last month and a half, and you can see what that's done to rents, right? The silver lining is that rent control doesn't apply to these properties, but you never know. Government, it's either a joker card or an ace. You have no idea what you're going to get in that hand. And so they may come back and repeal rent control, and that could impact a lot of the investors. But that is unlikely. Nevertheless, it's difficult to say. Anybody else? All right, folks, if nobody else has anything, this Thursday's training, highly recommended that you come in person. We've got Brad from Twin Peaks coming in. He's bringing in some of his gadgets that he uses for home inspection. So it'll be a great opportunity for you to see firsthand the types of technologies that these home inspectors are using to really advance and push the envelope further when it comes to home inspectors. So if you haven't RSVP'd, seats are always limited in person. It is a hybrid session, but I highly recommend you come in if you're able to. We'll see you guys on Thursday. Take care, everybody.
Thank you.
Bye for now.